Hey everyone, welcome back to the Crypto Code. Here's the thing, most people won't get crypto wrong in 2026 because they bought the wrong coin. They'll get it wrong because they backed the wrong trend. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice, so do your own research before you make any crypto trades. Okay, so capital doesn't flow evenly across the market. It moves toward narratives that solve real problems, attract institutions, and create demand that lasts longer than a short hype cycle. So let's break down the 5 crypto trends smart money is already watching for 2026 and why understanding narratives matters far more than chasing pumps. The first trend is something most people still underestimate. Prediction markets. Instead of speculating on charts, prediction markets let people position around real-world outcomes, things like elections, interest rate decisions, inflation data, and even geopolitical events. These platforms gained serious attention during recent election cycles because they consistently priced outcomes faster and often more accurately than traditional polls or media coverage. The reason is simple. These markets act like decentralized probability engines. There's no house-setting odds. Prices move based on collective belief backed by real money. Being right pays, being wrong costs you. For years, regulation held this sector back. That changed when election-based contracts were recognized as financial instruments rather than gambling products, removing a massive legal barrier. While most of the leading platforms are still private and hard to invest in directly, this sector is scaling fast. Even without token exposure, prediction markets are worth paying attention to because they reward research, knowledge, and conviction. The next major trend heading into 2026 is the return of AI in crypto, but this time with real utility. The first AI crypto hype cycle burned a lot of people. Tokens ran ahead of adoption. Now the narrative is maturing. By 2026, AI in crypto looks far less flashy and far more practical. We're talking about autonomous agents that monitor markets around the clock, interpret on-chain data in real time, and execute strategies without emotion or fatigue. As AI becomes an always-on infrastructure, decentralization becomes critical. Recent cloud outages showed just how fragile AI systems can be when they rely on a single centralized provider. Most AI investments still make more sense in traditional markets, but a small number of crypto-native projects are working on decentralized compute, AI coordination, and agent-based payments. The key here is filtering hard, ignore buzzwords, focus on infrastructure. Another trend quietly gaining momentum is real-world assets continuing to move on-chain. This wasn't a flashy breakout narrative, but it never slowed down. Tokenized treasuries, deposits, bonds, and commodities kept onboarding institutions throughout 2025, largely outside of retail attention. Stablecoin clarity played a huge role. Once rules around backing and custody became clear, institutions felt comfortable deploying real capital on-chain. We're now seeing brokerages, banks, and global platforms integrate stablecoins and tokenized assets directly into their operations. Even though many RWA tokens don't offer direct cash flow, this sector improves liquidity, legitimacy, and institutional participation across the entire crypto market. Now, one of the most important shifts heading into 2026 is the return of revenue-generating crypto apps. For years, crypto was dominated by tokens that didn't actually do anything. That's changing. Apps and protocols that generate real revenue through trading fees, services, or usage are becoming far more attractive than pure speculation plays. Revenue enables buybacks, distributions, token sinks, and stronger liquidity floors. The question investors should be asking is simple: does this protocol make money, and do token holders actually benefit from it? If the answer is no, governance alone isn't enough anymore. Finally, there's a trend that's already reshaping market structure: digital asset treasuries and ETFs absorbing supply. Corporate crypto treasuries are no longer experimental. What started with Bitcoin has expanded into Ethereum, Solana, and more. Companies are holding digital assets for growth, hedging, and strategic positioning. At the same time, ETFs are creating consistent passive demand. These buyers don't trade emotionally. They accumulate methodically, and they reduce circulating supply. That changes how markets behave going into 2026. So the takeaway is this: chasing individual coins is exhausting. Understanding where capital is flowing gives you an edge. Prediction markets are scaling. AI is shifting from hype to infrastructure. Real-world assets keep onboarding institutions. Revenue-generating apps are gaining relevance. And ETFs and corporate treasuries are absorbing supply. Crypto is still volatile. Risk hasn't disappeared. But smart positioning starts with narratives, not noise. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We've already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.